Hi guys, welcome to my channel. Before we get started, make sure to hit that like button. Also subscribe to my channel, How to Invest in Stocks for Beginners. So make sure to watch the full video. Introduction. Investing in stocks is an excellent way to grow your wealth and achieve your financial goals. It provides opportunities for capital appreciation and the potential to earn passive income through dividends. However, for beginners, navigating the world of stock market investing can be overwhelming. There are various factors to consider, including market dynamics, company analysis, and risk management. In this comprehensive guide, we will explore the fundamentals of investing in stocks, offering valuable insights and practical tips to help beginners get started on their investment journey. 15. Understand the basics of stocks. Before delving into stock market investing, it's crucial to understand the basics. A stock represents ownership in a company. When you buy shares of a company's stock, you become a partial owner and have the potential to benefit from the company's growth and profitability. It's important to familiarize yourself with terms like market capitalization, dividends, earnings per share, EPS, and stock exchanges. 14. Define your investment goals. Before making any investment decisions, it's essential to define your investment goals. Are you investing for long-term growth, generating passive income, or a combination of both? Clarifying your objectives will help you determine your investment strategy and the types of stocks that align with your goals. 13. Educate yourself. Investing in stocks requires knowledge and understanding of market dynamics. Take the time to educate yourself on various investment concepts, such as fundamental analysis, technical analysis, and portfolio diversification. Read books, attend seminars, and leverage online resources to enhance investment knowledge. 12. Assess your risk tolerance. Understanding your risk tolerance is crucial in determining the appropriate investment strategy. Stocks are inherently volatile and can experience significant price fluctuations. Evaluate your financial situation, investment time horizon, and emotional resilience to market volatility. Conservative investors may prefer stable, dividend-paying stocks, while more aggressive investors may be comfortable with higher risk growth stocks. 11. Research and analyze companies. Thoroughly research and analyze the companies you are considering investing in. Look for companies with a strong track record of growth, sustainable competitive advantages, and solid financials. Analyze financial statements, including income statements, balance sheets, and cash flow statements. Additionally, consider factors such as the company's industry position, management team, and future growth prospects. 10. Diversify your portfolio. Diversification is a key risk management strategy. By spreading your investments across different industries, sectors, and geographic regions, you reduce the impact of any single stock's performance on your overall portfolio. Diversification helps mitigate risk and allows you to capture opportunities in various market conditions. 9. Consider index funds and ETFs. For beginners, investing in index funds or exchange-traded funds, ETFs, can be a practical option. These investment vehicles allow you to gain exposure to a diversified portfolio of stocks that track a specific index or market sector. They offer instant diversification, low fees, and the convenience of being traded on stock exchanges. 8. Practice patience and long-term thinking. Successful stock market investing requires patience and a long-term perspective. Avoid making impulsive decisions based on short-term market fluctuations or daily news headlines. Instead, focus on the long-term potential of your investments and stay committed to your investment strategy. Allow time for your investments to grow and compound. 7. Implement dollar-cost averaging. Dollar-cost averaging is a strategy that involves investing a fixed amount of money at regular intervals, regardless of the stock price. By investing consistently over time, you can reduce the impact of market volatility and take advantage of potential buying opportunities during market downturns. This strategy helps remove the pressure of trying to time the market. 6. Monitor and review your portfolio. Regularly monitor your investment portfolio to ensure it remains aligned with your goals and risk tolerance. Stay updated on the performance of the companies you have invested in and overall market trends. Reassess your investment thesis periodically and make adjustments as necessary. 5. Stay informed about market news and events. Keep yourself informed about market news, economic indicators, and geopolitical events that can impact the stock market. Stay updated on company earnings releases, industry developments, and regulatory changes. Subscribe to financial news publications, follow reliable sources on social media, and join online investment communities to stay informed. 4. Seek professional advice if needed. If you feel overwhelmed or lack the time and expertise to analyze stocks on your own, consider seeking professional advice. Financial advisors can provide personalized guidance based on your financial goals and risk tolerance. They can help create a well-diversified portfolio and provide ongoing portfolio management. 3. Embrace a long-term learning mindset. Investing in stocks is a continuous learning process. Embrace a long-term learning mindset and stay open to acquiring new knowledge and skills. Stay curious, attend investment seminars, read investment books, and learn from experienced investors. As you gain more experience, you'll become more comfortable and confident in your investment decisions. 2. Practice emotional discipline. Emotions can be detrimental to investment success. Avoid making impulsive decisions driven by fear or greed. Develop emotional discipline and base your investment decisions on sound research, analysis, and your predetermined investment strategy. Take a step back during market downturns and avoid reacting hastily. 1. Start early and stay committed. Time can be your greatest asset in stock market investing. The power of compounding allows your investments to grow exponentially over the long term. Therefore, start investing as early as possible and stay committed to your investment plan. Regularly contribute to your portfolio, reinvest dividends, and let time work in your favor. How to manage your investments. Now that you've established a brokerage firm or advisor, it's time to look at your investments. It's easy if you use a human or robo-advisor. Your advisor will do all the heavy lifting, manage your paperwork, and keep you on track. If you manage your information, you must make business decisions. Is it time to sell or finance? Was the last quarter of your investment a signal to sell or buy more? If the market goes down, will you buy long or sell? These are tough decisions for investors old and new. If you are an active investor, you need to be up to date with the news to make the best decisions. However, many passive investors have less discretion. Because they focus on the long term, they usually buy on a steady, regular basis and worry about short-term moves. Tips for beginner investors. Whether you open a brokerage account or an advisor-led account, one of the most important factors in your success is your attitude, perhaps just as important as the products you buy or the money. Here are great tips for beginners. Hollywood portrays investors as successful entrepreneurs, and you can be successful using a buy and hold strategy. Regularly buy and hold an S&P 500 index fund that includes the largest companies in the U.S. It can be helpful to keep track of your data, but be careful when the market is down. You will tend to sell your shares and deviate from your long-term plans, sacrificing your long-term results for today's security. Think long-term. In order not to scare yourself, it is useful to look at your records only at certain times, like the first month, or only at the time of tax payment. When you start investing, the world of finance can be intimidating. There is much to learn. The good news is that you can progress at your own pace, improve your skills and knowledge, and continue when you feel comfortable and ready. Best tips for novice investors. As a new investor, it's good to keep things simple and then expand upon your skills. Fortunately, investors have a great option that allows them to buy a percentage of top U.S. companies in one easy-to-buy fund, the S&P 500 Index Fund. This type of fund will enable you to own small shares of some of the best companies in the world at a low price. The S&P 500 Index Fund is a good choice as it provides diversification and reduces your stock risk. From beginners to advanced, it's a good choice for investors who don't want to spend their time investing and want to spend their time doing other things. If you're looking to expand your business beyond mutual funds and into individual stocks, it's worth investing in big cap stocks, top companies, and financial stability. Look for companies that have a long history of sales and profits, don't have a lot of debt, and have a fair value, measured by earnings price or other measures. For you to do, don't buy overvalued stocks. Conclusion: investing in stocks can be a rewarding and profitable endeavor, but it requires a thoughtful and informed approach. By understanding the basics, setting clear investment goals, conducting thorough research, and staying disciplined, you can navigate the stock market with confidence. Remember to diversify your portfolio, stay informed, and keep a long-term perspective. Investing in stocks is a journey that requires continuous learning and adaptation. With patience, persistence, and a commitment to your financial goals, you can build a successful stock portfolio that aligns with your objectives and helps you achieve long-term financial success. What do you think of our video? Let me know in the comment section below. If you enjoyed this video, make sure to hit that like button. Also, subscribe to our channel before you go.